Greetings from New York City. I want to actually take some time here to first off say thank you to everyone who's been subscribing, liking the videos, commenting. I try a lot of different things here. I explore a lot of creative things here, and I appreciate you guys for, giving me the space to do that. With that being said, there are certain topics where I don't feel the need to be funny, although I probably will slip in a couple lines here and there, but I want to give you what I call, Frank talk. My last name is Franco, so it's kind of like imperative that I talk to you frankly. So what I'm going to share with you is just my opinion, and it might not apply to you, but I have a feeling that there's a lot of people who are my age, maybe a little bit younger, maybe a little bit older, that might benefit from hearing this. And I'm speaking on this from experience. I'm speaking on it from, a lot of experience. And so I hope that, if it's not for you, you don't take it offensively or think that I'm telling you what to do. But with that being said, let me get into it. If you're investing now with the idea that you're going to need the money for something in the relatively short term, maybe you're thinking, okay, I'm going to get some dividends off a stock and I'm going to take those dividends. I'm going to do something with it. I want that income now. Or, maybe you're hoping that the price of something that you bought is going to go up a lot. You could sell it and take the profit and then do something with that money. That, in my view, it's not the right way to invest. It's not really investing. It's actually speculating. And if you want to do that, that's up to you. But for me personally, let me just tell you how I look at it. For me, I own a business. I started a business here in New York when I was 28. I started it with my own money. It's been running it for 7 years now. It's been very successful for me, thankfully. And that business has afforded me, the opportunity to invest, a considerable amount of capital over the years. And it's given me the opportunity to dedicate more of my free time to learning and then creating content like I have through CMQ for the last 2 years now. I think it was about 2 years ago I actually published the first episode of the podcast. And just a quick side note, I found out from Spotify through the Spotify data in 2022 that the CMQ Investing Podcast was in the top 1% globally for most shared and most followed. And so that is for an investing podcast that is largely centered around men who are in their 90s. So thank you so much to those of you who listen. And if you don't know about it, and you very well might not know about it, that's why I'm on YouTube now. There's 123 episodes, many of which I think you'll find to be, well, first of all, they're very short and concise, but they're packed with wisdom and wisdom that's been really helpful to me. And I find it paying off at a time like this. So I'll put a link in the description. But with that being said, this, my situation, for me, money I put in the stock market, I always looked at it like a system, like it's my compounding machine. The money that I put aside or that I save and I put into the stock market, I'm attempting to achieve an annualized return over a long period of time that, it's at the very worst, better than inflation, hopefully better than a high yield savings account. And given enough years to grow, that money's going to, be a good thing for me in the future. Old man Franco will say, thank you, Sonny, something along those lines. Now, I can't say, I know there are situations where people are, going through tough times and maybe the stock market, they see an opportunity that they think is the right one. I would really question that though, because I think if you have the smarts to mess around in, let's say, dividend stocks or think about how you can, kind of make a quick buck in the stock market, that is still very risky. There is a reasonably high probability it doesn't work out. Warren Buffett talks about this, risk in the short term, buying Coca-Cola and needing to sell it a year later, that's a risky transaction. But buying Coca-Cola and not selling it for 30 years, it's not very risky at all. There's always risk though. I think if you have, like I said, the smarts to be doing, this sort of approach, you ought to be putting that energy into starting your own business. It could be to position yourself, higher up at work, maybe doing some education offline or online, to get some new credentials that you can leverage for yourself at work to make yourself more valuable and get more money. And from that money, you can use it to do whatever else you need to do. And that could include just having more money to invest. But I would not look at the stock market as a place to make a quick buck. And I remember I read this survey, I think it was probably 2 years ago, about some of the younger generation, like people who were like 20, were using the stock gains to pay off credit card bills and things like that. And look, if you were able to do that, like consider yourself lucky and, it is what it is. But that is not, if you're looking to the stock market to kind of be that that money laundry machine for you. And I don't mean laundry like, I don't know why I said laundry like you're doing something illegal, but it's it's just not a good way to go about it. And I don't know how else to explain that other than just don't do it. Take your energy and focus on making yourself more valuable in the market. My approach, and again, I'm just me, but my approach when I was in my 20s, I was every single year in my 20s, I made more money than the year before. And I'm not saying that I don't like talking about my own finances because I just didn't grow up in a place where that was really looked upon like it's cool. So it's a little weird for me to kind of even say that to you guys in a public forum. But I'm trying to say that in the sense that my mentality is the same mentality you probably have. Like, I want to make as much money as I possibly can. I'm not a guy that wants to go and have Lambos and be like, what's the guy, Andrew Tate, like talk about my Bugattis or whatever that dude says. But I do care about, putting myself and my family in the best position possible. And even family that I don't even know yet, right? Like, I don't have kids, but if I have kids one day, hopefully I can, I've done things now that they'll benefit from, right? And, there's also things you can do with money that are beyond yourself, being able to contribute to the things you care about in your community, in your cities, etc. So in my 20s, I mean, every year I made more money than the year before. And it got to the point, even then when I started my business, I was making more money one year than the next year. And it was to the point where it was, and I'm not trying to flex, I'm not one of these guys, but, it was like, what the, it was like, you're going up a roller coaster and you're just like, what, it was crazy. And thankfully, I kept a sane head. I didn't go out and blow money on a bunch of stupid stuff. I actually lived well below my means. I live in New York City, mind you, so it's not cheap here. But I'm in New York because of the opportunities it presents me with and things I can do in my business that I wouldn't be able to do otherwise. But I wasn't looking at it like, oh, I want to throw it in the stock market and get a quick flip. For whatever reason, I never looked at it that way. At least I don't remember looking at it that way, and I didn't lose it doing it that way. So I don't think I ever did. And I would just really strongly encourage you to think about it the same way. And if you don't want to use me as your example as someone you should listen to, I can't think of many, really legendary investors that you'd actually want to be like, not just about how they make money, but like their character. I can't think of many that look at the stock market that way. It's at the end of the day, you're investing in businesses. That's what, having publicly traded stocks lets you do. You can provide liquidity for businesses that, hopefully you're not just buying because you love them. As they say, buy things you love. No, you want to buy great businesses. But if you find a great business, the most advantageous thing you can do is let it compound. The Apple earnings came out yesterday, and I am not a photographic memory, but I can be semi-photographic at times. So, take this with a grain of salt. But not only does Apple, on the yearly basis have net income of over $100 billion, which no other company to my knowledge does, at least not a publicly traded company. Not only do they have that net income, but their capital expenditures are like 11 billion. When you look at the companies that are closest to that 100 billion in net income, their capital expenditures are like 20, 30, 40 times, not 40 times, sorry, 40 billion to Apple's 10 billion or 11 billion. So Apple's this crazy business that, puts up a lot of capital, but relative to how much it spits out every year, it's insane. And, that's the kind of business that if you can buy a little piece of it and hold on to it, you're going to benefit. And I'm just going to finish with this note, because if you're younger and you're like, well, too bad for me, I can't do that. When I was in 2013, I was working at a startup, and I was just starting to make enough money where I could contribute to a Roth and do all that kind of stuff. Because frankly, making a $5,000 contribution, that wasn't really realistic to me until I was in at least my mid-20s, because I needed the money to live on. And when I got to that point, the first thing I did was I bought Apple stock and Facebook stock. I didn't have the same sort of toolkit to be able to analyze the situation like I do now. So there's definitely some luck involved here. But the idea was I recognized to put whatever I could aside into something that would grow over time, and likely continue to grow. And I didn't touch it. And, have since added a lot more to those positions over the years. But if I just look at those positions from, I think, like I said, 2013, that was really good thinking and a good muscle to be developing and a good way of looking at the stock market that I was, living out. And that's all I'd say. It doesn't matter if you have $10 to invest or you're investing $10 million or $10 billion. It's all the same. It's all relative. You just want to be doing those, treating it and doing it with a healthy habit. And I think, long term, that's where the real money's made. So even if you need the money and you need money quick, and you're thinking stocks or the stock market or options or whatever you're thinking, I would argue that it's not even the most reliable way to do it. Like, I would bet on yourself if you need to make quick money, or if you're just in a situation where you want to have more cash flow coming in. Put that on yourself. Reinvest that into you, and go out and make something happen for yourself. If you're, like I said, if you're smart enough to watch content like this, and I'm not saying it's because of me, but just this is not content that a bunch of idiots are watching.
Come on, what's the news? Get out.
Andre was a magic man.
Yeah.
Trevor.
You can go out and make something happen. Meanwhile, let your other money, your savings, let that money work for you, rather than you have to wait around sweating on it because you need it in 6 months. That's just my advice. If you have any thoughts on that, if I can explain anything more clearly, let me know. I'm going to just upload this as is, not because I don't want to make it nice for you guys, but there's certain messages I just want to kind of get out and kind of get in the flow of that. Appreciate you guys. Let me know what you think in the comments. I hope this was helpful. For CMQ Investing, hit the subscribe button, like, comment, do all that good stuff. I appreciate it very much, and we'll talk to you soon, all right?